Wow. I like that. Look, I want to see it again. All right, lots of market movement in the short term, but, you know, you always hear investors say, all right, as you kick off another quarter, don't be so obsessed about these quarter-to-quarter movements. Think long-term, which begs another question. What is long-term? To former Morgan Stanley chief economist Vincent Reinhart. Vince, first of all, what do you consider long-term these days?
Well, long-term growth is what an economy can achieve in the next 3 to 5 years. Bad news is estimates of that long-run growth has come down probably a percentage point over the last 10 years. We're only growing about 1.5% a year.
You know, it's interesting. If you were to talk to an investor at the market heights back in 2000, make a 10-year bet on this market, 10 years later, maybe excluding dividends and, you know, capital gains, I mean, you would not have seen much growth at all in your portfolio. So a lot of people soured by that experience of the financial meltdown are leery to come back into the market now. What do you tell them?
You got to tell them that there aren't many places to pick up return, and one of them is in the equity markets, the other is in U.S. fixed income markets, and maybe a little in emerging markets. That growth is associated with the long-term expansion of earnings and the ability to service balance sheets. And the best way an economy delivers that is by having increases in hours worked and increases in output per hour. There's no mystery to it. You got to get potential output growth through productivity growth and more hours worked.
You know, Vincent, when you look at the markets right now, you hear that they're, you know, poised to run up and have been running up largely on optimism that the Trump agenda is an investor-friendly agenda, whether you're a Republican or Democrat, conservative, or liberal, and that is what's buoying these markets today, notwithstanding the staggering end to the last quarter, notwithstanding, that is what people are looking forward to. Low taxes, lower regulatory environment, and that's what's guiding this. Do you agree with that?
Oh, I think the search for return is pretty bipartisan, so it's on both sides of the aisle. But I think the hardest question in finance when you're looking at prices of assets is how much is already priced in and how much is more to come. I think there's a sense, particularly in equity markets in November and December and the beginning of this year, that people got a little ahead of themselves about expecting more out of Washington quicker than the clunky machinery of American politics actually can deliver. Do think they will deliver, but, you know, first on my list actually is regulatory relief. The president's been doing that already in terms of the executive orders he's been signing. As they change the regulators, that'll have a material effect on the opportunities to save and invest. Next comes tax policy. Capitol Hill's got to get itself in order and get on the same page as the president. That, I think, will happen this year. It just won't be a pretty process. You know,
it might happen, Vincent, I've been having this debate here internally over at Fox Business and Fox, that the markets definitely want corporate tax reform, but if that's all they get, I've said they might be dissatisfied and sell off on that because a lot of them are individual taxpayers themselves and want their own tax break, and if it doesn't materialize, they might, you know, stomp and get very angry. What do you think?
So the reality is the recent taxes don't get reformed very often. Last real one was in 1986.
Right.
It's complicated, and a lot of infrastructure gets encrusted around the tax code by special interests. The problem in just changing the corporate income tax, and I agree with you here, is that there are so much of U.S. business activity is run through the personal income tax system.
Right.
So you can't change one rate and then have a higher rate sitting there in household, you know, on the household side, when so much of what we do is still at the good old, you know, 1040 form.
You're right. You're right. Vincent Reinhart, thank you, former Morgan Stanley chief economist, joining us in Boston.